Well, hello everybody. It's Ron Cartey here, part of the Expat Club of Pattaya, also ex-vice president of the Pattaya Rotary Club. And so I'm part of the community here, but more importantly, I'm also an expat. So fortunately, I've got Carl Turner, co-founder of Expat Tax Thailand with me.
Hello.
Is that right?
Yes, it's
and
right. Yeah.
we're going to be talking about taxes, and it's totally relevant for me as well. So I've got a whole rake of questions for you.
Great, perfect.
So are you ready?
I am, yeah.
You
I am,
sure?
Ron. Thanks for having me.
What I've been doing since Carl attended the Expat Club some months ago, did a talk there, very impressive, but it opened up a whole race of questions for everybody. And so in the last couple of months, I've been getting some questions ready that's relevant for everybody. So
yeah, that's fine. Fire it away.
You sure?
Here to help.
Okay. Yeah. And what I've done, I've simplified it to 8 categories.
Okay.
All right, to try and make it a little bit easier. But within those 8 categories, we've got 352 questions. Only joking. The first one is the changes to the actual tax rules.
Yes.
All right. Can I ask you, I've got it written down here, what's changed with the tax rules, and will it actually go ahead, and how does it affect everybody?
Okay, yeah, good question. So what's actually been announced? So last year in September,
right,
the revenue department, they actually issued a departmental order. So it wasn't a rule change. All it actually was an instruction to all the revenue departments, to officers, to actually overrule a previous ruling that was given.
Right.
So this is a ruling that was given in the 1980s to say that if income is brought into Thailand and it's left overseas for 1 complete year before it's brought in,
right,
then it's not assessable income and taxable in Thailand. So all this revenue order has done is to overrule that previous ruling and go back to the original law. So that's actually what's actually been announced. That was in September last year.
Well, I was just going to ask you, has it been officially announced in the Royal Gazette? Is that what you're saying?
Yeah. So quite a few people have asked that question to ourselves, is I'll wait for official confirmation. It's not been in the Royal Gazette. Well, actually, it was. It was actually announced in and published in the Royal Gazette on the 6th of October last year. So that was actually, this has started from the 1st of January 2024 for this current tax year. So the tax year runs from 1st of January all the way up to the 31st of December. This started this year, and it was announced last year that it would start this year.
Interesting, fair enough. And then what about the people that are waiting to be contacted or informed directly? What about them?
Right, okay, yeah. So they're not going to get informed or contacted directly.
Is that right? Okay.
Yeah, it's up to anyone who's a Thai tax resident. So let's explain what that means. Thai tax resident is just someone who remains in Thailand for 180 days or more in a calendar year. So they can come and go.
Yeah,
it's not consecutive days.
Right.
It's just within a tax year. So 1st of January to 31st of December. If they're here for 180 days or more, they're a Thai tax resident. Then they have to abide by the Thai revenue tax laws. They're not going to get announced. They're not going to get informed or told anything else other than what's being published. And the revenue's actually done quite a good job. They've had a lot of Q&A sessions.
Right.
In July, they actually published a document to show how foreigners can pay tax in Thailand. That was announced, that was published in July as well. So they've actually produced and gone over and above what they needed to in terms of trying to inform people what the rule changes are and how they file taxes.
So long and the short of it, these changes are going to happen.
They've already happened, yeah.
Okay,
yeah,
so
actually happened,
and how will that impact the expats?
For people that live in Thailand 180 days or more, it can have quite big impacts in terms of administration impacts as well for a lot of people. So if people live in Thailand, so 180 days or more, and they bring in, we call it remit. So that means transfer in from overseas. Whenever I say remit, it just means transferring in overseas. Also, if they bring in what Thailand classes as foreign sourced income, then now this has to be filed on a Thai tax return if they meet the criteria and their assets meet the criteria. So what does it mean? It means, historically, if people brought money in the next tax year from when they earned it, they wouldn't have to file a tax return in Thailand. But now it means if people do bring in pension income, investment capital gains, so they've got investments and they bring some in and it's made a profit, then they need to file for that. If they've got rental property overseas and they bring in that rental property income into Thailand, if they sell a property overseas or they sell crypto assets and they bring in the gains, then they have to file.
I've got some questions on crypto later, but okay, well, that moves on to really part two. And who has to file and what's taxable? I've got a whole little key question. I think you've already covered it, but who has to file taxes this year? And is that everybody or just certain people?
Yeah, so that's where there's a bit of confusion.
Yeah.
Not everybody who lives in Thailand 180 days or more has to file a tax return.
Interesting.
So let's talk through who doesn't need to file.
Yeah, please.
So anyone, just because you live here 180 days or more, there's not a requirement for visa renewals or anything like this to file a tax return. You only have to file a tax return if you have foreign sourced income.
Okay.
So what does that mean? It means the income that I mentioned earlier, also things like dividends, salary from overseas. If any of that's brought into Thailand or spent on an ATM card and the source of the money is from foreign source income, then they have to file a tax return. But also, Ron, if someone has domestic income, so if they have rental property here or a salary here,
even if a lot of people,
correct. Even if they don't live here 180 days or more, they have to file. But if people don't have these income sources, so let's say they're living on cash in the bank from previous years, or the asset classes are not assessable income, they don't need a tax ID number and they don't need to file.
Okay.
So they can live here for 180 days or more, not have a filing requirement, or they could live here less than 180 days because they've got local income, they have a filing requirement. Or they could live more than 180 days. And if they're bringing in foreign source income or they've got domestic income, they have to file. So it's not really,
it's a
bit complicated, but that's why we're here to help.
Well, I was going to say, people need you. I tell you now, a lot of these things I'm asking, you've already sort of answered, but I've got them listed. Is that okay? So I've got here these. By the way, these are all questions that I've got from expats since you last did your talk.
Right. Okay.
All
good.
right. So I'm trying to cover everything. So if I go over things twice, forgive me.
That's fine.
All right. And so got written down here, what types of assets are taxable in Thailand? What isn't taxable?
Yeah.
Can you give one or two examples? That would be helpful.
So let's talk domestically first.
Please.
So what income in Thailand has to be filed on a Thai tax return? So the most common ones are salary. People are getting a salary here.
Right.
Or if they've got rental properties in Thailand and they're receiving rental property. Then we look at foreign source income. So does that mean it means assets that are overseas that are classed as income and they're brought into Thailand? So let's have a think about some of these. So there's pension income. So if someone receives a pension, regardless of if they're moving it via Wise or another third party and then into Thailand, that's still pension income. Things like dividends from companies or mutual funds or stocks, that's assessable income if it's brought in. Things like property rental income, if that's brought in, that's taxable. If they've got gains from investments, crypto, anything like this, and they bring that into Thailand or they spend it on an ATM card where the source is from these foreign source income, then that's assessable income. If they sell a property overseas and there's a gain on that property and they bring the money into Thailand, that's assessable income. So there's quite a lot. Also, if they receive a salary overseas and they bring that in, that's assessable income. So there are quite a few different areas which are classed as assessable income, but also there's quite a lot that isn't.
You're going to be busy, aren't you? All right, I've got another question. What about gifts? Can people gift to their spouse? Let's say 20,000 Thai baht to a spouse. What happens with that?
Yeah, good question. So
that appears to be a good way to avoid tax.
So there's a lot of comments and people writing online that people can just gift money to their spouse up to 20 million Thai baht per year, and there's no personal income tax for this. The problem is, with everything in life, the devil's in the detail.
Yes.
And with this, it really is the devil's in the detail. So what qualifies as a gift?
Yeah, please.
So let's talk about the technicalities of what a gift is. It's a gift without reservation of benefit. So it means if you gift an asset you can't be seen to benefit from that now or any time in the future.
Right, how do you clarify benefit?
Well, if you live, let's just say an example, if you live with your spouse,
yes,
you send money to your spouse as a gift, and then you're benefiting from that money in any way, that's a pooled funds that you're using for expenses, things like that, you're benefiting from this. If she buys a car or he buys a car and you use the car, then that's a gift with reservation of benefit. So the problem with using gifts as a way to get around the tax rules is it can be seen as tax evasion. It's not a way to, it's not good tax planning. A real gift is something like, let's say you have a daughter and she's has a wedding, right? And you gift money to them for their wedding or as a gift that you aren't going to benefit from or see in the future. That's a real gift.
That's different.
It is. But if people do want to use gifts as part of their planning, then really they've got to draw up a gift document that should really be done overseas or notarized by a lawyer to show the time that it's done and make sure that they're not benefiting from that. Keep that on file in case they are ever asked what's the source of this money that was sent into Thailand, for example. So that's a long-winded way to say it's not really the best idea for tax planning to use gifts.
Okay, all right, excellent. Oh, no, good, mate. All good stuff. So look, we've covered two things so far. We've covered changes to tax rules and who has to file and what's taxable. Now we're coming up to tax credits and double taxation agreements, DTAs. Okay, I've got some questions on that. Is that all right?
Yes.
Okay. So first off, what does this mean? Right? Yeah, I've got a pension and it's been taxed already. What does that mean to me? How does it affect me?
So let's talk about DTAs in detail. Double taxation agreements is a topic we could talk about for 3 hours. We've done so far 6 one-hour webinars on double taxation agreements for different nationalities.
Yes.
It's quite complicated and complex. The problem what we have is people don't really understand what a double taxation agreement is for. So I'll explain really what it's for. It's a way for countries to divide up how assets are taxed.
Right.
And it's a clear way for how certain assets in jurisdictions are taxed if they are remitted to Thailand or not remitted into Thailand, for example. Thailand has signed 61 double taxation agreements with different countries. So all the usual countries that you'd expect. And that really sets out clearly how each type of asset is taxed, whether Thailand has the right to tax it or not, and whether then it follows local Thai domestic tax laws. So a double taxation agreement takes precedent over the local rules. So if the double taxation agreement says something about a certain asset, that takes precedent over the local rules. So let's talk about you with a pension, Ron.
Yes.
Where's your pension from, for example? What country is it from?
I'm from UK.
Okay, yep. So if you've got a pension from the UK, we have to look at the UK double taxation agreement with Thailand. So it doesn't matter on your nationality. It matters on the jurisdiction where the asset's from. So where's the asset from? Not you yourself.
Yeah.
So then we look at the UK Thai double taxation agreement, look at the section on pensions, and see, are there any exemptions or exclusions on there to show that this pension's not taxable in Thailand?
But there are exemptions and exclusions.
For certain countries, yes. So for example, US, Social Security is exempt from tax in Thailand under the double taxation agreement. Unfortunately for you, the UK double taxation agreement isn't so favorable.
I shouldn't have told you that.
So what does that mean? It means UK has the right to tax your pension.
Yes.
If you remit that into Thailand, it may be taxed in Thailand as well. So what does that mean? It means you would have to file, if you bring in over the minimum amounts, which is as a married person filing jointly, it's 220,000 Thai baht of income per year. If you're a single person, it's 120,000 Thai baht per year for pensions. If you're bringing in more than this amount, then you have to file a Thai tax return. What you can do, the good thing with Thailand and the revenue department is They will allow you to use the tax credits from elsewhere if the double taxation agreement allows
I had that written down, so thank you for covering that one.
So what does that mean? It means if you bring up your pension into Thailand,
yes,
depending how much tax you've paid on that in the UK,
right,
we can use that percentage of tax as a credit to offset against the tax in Thailand. So you'd file the income you've brought in from overseas, use your allowances and deductions on there, file the amount of tax that's due here. Then we get the tax certificate from the UK to work out how much tax you've paid, work out that as a percentage of the amount you've brought in, because you might not bring it all in, you see. Of course. And then we can offset the tax in Thailand with that using the tax credit. So there's a bit of work to it, but it means for a lot of people, this is an admin issue rather than a punitive tax issue. So,
and of course, you cover all that, and that's part of what you do to help expats such as me get over all of this.
So we have a service for helping people. It's called our assisted tax filing service. And we use this for claiming back tax credits on the tax return. So we can help people claim the tax credits back. We can help people file compliantly using all the allowances and deductions.
Good. Okay, now look at this lot. Okay, get ready. I've got some quick fire questions for you. Okay, I'm going to put you on the spot. Okay. I need to know where I've got it written down here. Are these excluded due to the double taxation agreements, or are they taxable or accessible income? Okay, so certain types of assets and pensions. I'm going to run through this just to make it clear for everybody. Okay.
Well, let's assume that we're bringing these into Thailand, right? So let's assume this is all remitted to Thailand, not left overseas. If the good thing, because Thailand's a remittance tax basis, if it's not remitted or sent into Thailand or spent in Thailand, it's not assessable income. So it's only taxable if it is brought in Thailand.
Right, thank you for clearing that one up. Okay, are you ready?
Ready.
Okay, so a little bit to do with the UK state pensions.
UK state pension under the double taxation agreement. There's no exclusion for UK state pension. So there's a note on there for government services, but UK state pension isn't a government service. So what does that mean? It means it just falls under the other pensions. So it can be taxed in the UK. Then when you bring it into Thailand, Thailand has the right to tax that, but you can use any tax paid in the UK as a tax credit.
UK private pensions.
Right. So this UK private pensions follows the exact same rule as state pensions. You can use the tax paid in the UK as a tax credit against to offset the tax in Thailand if it's remitted to Thailand.
And I've got one more. How about tax-free cash from UK pensions?
So for UK nationals, if you've got a pension, you're allowed a certain percentage as a tax-free lump sum. So it's usually up to 25% of the up to lifetime allowance. So if you in the UK, you can get that money paid out. It's tax-free. We call it pension commencement lump sum. The problem in Thailand is there's no exclusion in the double taxation agreement for tax-free lump sums. So what does that mean? It means if you bring that money into Thailand, it's classed as income, the same as everything else. Problem is you won't have paid any tax on that in the UK. So it would all be added to personal income tax in that year. So people who are about to take their pensions or pension commencement lump sums, it's advisable to get some advice, because if they bring that in, they could have a large tax bill that you wouldn't know about.
So give advice before you bring it in, not say, what do I do now? I've brought it in.
Correct. Otherwise, we just have to file and pay the tax.
And just let everybody know, I've got this list from all the people the expats that I've bumped into since you were talking to us. So you opened up a whole bag of worms, I'll tell you now. So US Social Security, I think you've already mentioned about US.
So we get a lot of questions about US pensions and assets and Social Security. The good news for Americans is US Social Security is mentioned in the double taxation agreement and it's excluded from taxation in Thailand. So that can be brought into Thailand, remitted into Thailand, spent in Thailand. It doesn't need to be filed on a tax return. It's not assessable income. So that's good news for Americans with Social Security.
US 401k.
So 401ks, that's different. So under the double taxation agreement, US Thailand is a bit different to a lot of the others. It actually states that it's taxable in Thailand and not in the US.
Interesting.
So if the 401k is brought into Thailand, it's got to be added to your personal income tax in Thailand for that year.
Right.
And then you can claim back the tax in the US for the tax paid in Thailand. So it's a bit more complicated. So 401ks is different to how the Social Security Act.
Thank you for clearing that one. I've got US Roth IRA.
Right. Okay. Yeah. So Roth IRAs are actually tax efficient in the US.
Okay.
They're not taxable. The problem is it's not mentioned in the double taxation agreement. So that just falls under the same as 401ks in terms of if that's transferred into Thailand, then it's assessable income and taxable here. But the problem with that one, you can't offset, you can't claim back the tax in the US because it's not taxed.
All right, that will keep our American colleagues happy. Okay, what about Canadian pensions? Do they escape?
Yeah, so we're about to put on a Canadian double taxation agreement webinar. And with pensions, their double taxation agreement states that pensions are not taxable in Thailand. So they're taxable in Canada, but not in Thailand. So they can be remitted into Thailand. It's not assessable income. So that's good news for them.
What about Australia, superannuations?
Yeah, so Australian, we've also put on a double taxation agreement for Australians with a chartered accountant in Australia. And this one is a bit of a mess because it's not mentioned in their double taxation agreement separately. So what does that mean? It's not exempt from tax in Thailand. If the superannuation is transferred into Thailand, remitted into Thailand, then that is classed as pension income. It's assessable income. The trouble is the superannuation is not taxed in Australia. So it can mean that this is taxable here without being able to use a tax credit. So this is an area where, there could be a tax implication here where there wasn't before.
Interesting. I've still got lots to go. Okay, you're not getting
you're
not getting off the hook yet. Okay, all right. How about Dutch pensions?
Okay, Dutch pensions. Yeah, they're typically not taxed in Holland. So if they're brought into Thailand, then they are assessable income. In Thailand. Yeah, so they're not.
This is all taxed. Good stuff. Because we've got multinationals as expats here. Okay, what else have I got here? Government civil service pensions. What about tax favourable investments like UK ISAs?
Right. Okay. Well, let's start with government and civil service pensions. So we get a lot of questions from different nationalities.
Yes.
It tends to be, you've got to check the double taxation agreement, but it tends to all follow the same route. If you've worked for the government, civil service, military, it tends to have an exclusion that this is not taxable in Thailand. You have to check the double taxation agreement, but generally this is how it is.
So that's good.
Not
news.
Taxable if they bring that money into Thailand. It's taxable elsewhere. Potentially taxable elsewhere.
Another 35 one. I've only okay. All right. Okay, good one here. Was asked this: if I sell my property and bring in the money, what happens then?
Yeah. Okay. Well, let's go back to UK ISA because
please.
I forgot to answer that. So with the UK ISA, the problem is it's tax efficient in the UK.
Yeah.
You're not taxed on the gains or the income paid out. But in Thailand, it's the same if you live in Spain, for example. It's not seen as there's no exclusion on the double taxation agreement. So you'd be taxed on the gains. It'd be classed as capital gains. The capital gains, if they're brought into Thailand, is assessable income. So let's go into the property.
Yeah, please.
Now, so property, if you sell a property overseas, you have to look at the jurisdiction where the property was. So where is the property located?
That's number one.
Then look at the double taxation agreement
with that country
to see, are there any exclusions? Does Thailand have the right to tax or not? The majority they are potentially taxable in the other country.
Right.
And then once it's remitted, transferred to Thailand, then Thailand has the right to tax on the capital gains. But certain countries, if it's a residential property, there's no tax on the sale of your residential property. So that's where the complication is. If they bring that money into Thailand, they can still be taxed. If they're a Thai tax resident when they sell it, bring the money to Thailand, remit the money, they can be liable for the capital gains on the property, even if it was the main residence. So they've got to be careful with this.
All right, mate, you're doing good. Thank you very much for this. Really, this is very. And then last one, what happens if I sell investments and bring it in? I think you've already answered that, but just go over it again.
So again, it really depends on the double taxation agreement.
Yeah.
You've got to look at that specifically, not for your nationality, but for where the assets are. So if they're in Singapore, for example, or another jurisdiction like Isle of Man, you've got to look at the double taxation agreement between there and Thailand. Then if you bring in the assets, it's all to do with the capital gains. Has there been a capital gain on that asset? If there has, that amount, the percentage of the amount that you bring in is classed as assessable income and added to your income tax for that year. You can potentially offset with any tax paid in the other jurisdiction, but it depends on that DTA.
I think you've got a lot more information on these double taxation agreements. So where can people find out this?
Yeah. So on YouTube, we've got a lot of videos on the double taxation agreements. Also on our website.
Excellent.
We've got a lot of content for most the common nationalities that we deal with. And if people do have any questions specifically about their nationality or the jurisdiction where their assets are, just get in touch. It's easy. We've done a lot of research on the 61 double taxation agreements, and we can help people understand the rules.
I think a lot of people are going to need your help. No question of it. I mean, it's good that we're covering it now, but there's a lot more to it that meets the eye.
There is. Yeah. It's complicated. We're here to help.
Okay. All right. Well, look, and what's required to show that tax is paid in another country, and whether the amounts are tax paid or fund remitted need to tally.
Right. Okay. So if you are going to use the double taxation agreements and tax credits for things like your pension or things like investments that have been taxed, then you need to prove that the tax has been paid in another jurisdiction. It's not enough just to say there's a double taxation agreement in place. You need to get a tax certificate from the other jurisdiction to show the tax has been paid. And then we use that to file. If there are different tax years, then we use accounting principles to reconcile so that we can actually calculate that properly. But we really need that tax certificate in order to file tax credit.
Mate, thank you very much. Look at this. Done. Okay. But the main thing is, if people need more information, you can reach out. It's all there. Okay.
We've got a lot of frequently asked questions on the website. We've got hundreds of questions that we've answered and put online so people can see the information there. We offer free 15-minute consultations as well. So that people can have especially to go through the tax calculators so they can see how much for their situation would they potentially be liable for. Can they claim tax credits? We can help with that because people need to understand the rules before they decide what they need to do.
All right. Well, that's 3 specific areas we covered. I'm coming up to number 4 now. All right. Okay. And the main one is, how do people file? All right. We've covered knowing what's taxable, what is and all that, but how do people actually go and file? Okay. So number 1, when should you apply to become a Thai tax resident?
Right. Okay. Yeah. Good question. So you don't really need to apply to be a tax resident. You are a Thai tax resident if you're in Thailand for 180 days.
That's it.
So then if you do need to file a tax return, so you meet the criteria. So if it's pension income, 120,000 Thai baht that you've remitted in as an individual, 220,000 as a married joint filer. If it's from other types of income, so capital gains, then it's lower brackets. It's only 60,000 as an individual or 120 for a married joint filer. Then you have to file a tax return. The first step to file a tax return is you need a Thai tax ID number.
Okay.
So to get a Thai tax ID number, there are a few different ways to do this. 1, visit your local revenue office, wherever you are registered. And fill out the form. Take the documents that they require. Probably best to take someone who's, if you don't speak Thai, to take someone who can speak Thai.
That's important.
And then you can get a Thai tax ID. You've got to prove that you have income that you need to get a Thai tax ID number for. That's one way. Another way you can get it is actually we have a paid service to obtain tax ID numbers, so they don't have to visit our office or the revenue office. They can do it all remote, all online with ourselves. We can help people get this, and we actually have to send someone to their local revenue office to get.
I think so.
Thai.
That's important.
Yes,
Really.
So Thai tax.
I think that's a good option that a lot of people are going to take up.
Yes.
Really.
Yeah.
Fantastic. No, really. And then what I've got, we've covered this again. When is the tax filing deadline in Thailand? And I've got here, how do you file a tax return? We sort of covered that one anyway.
Yeah. Okay. So the tax year, as mentioned earlier, runs from the 1st of January to the 31st of December. If they have to file a tax return from the 1st of January the next year, all the way up until the first week in April. So you file the following tax year in the first 3 months. The first week of April is the cutoff point. Few ways that people can file. Again, they can visit their local revenue office where they're registered, fill out the forms. It's best to take someone who can speak Thai to actually communicate, fill out the forms completely and submit. Or they can use the e-filing online. Again, they can try and do that online. They do have an English version. It's quite complex and difficult to do. Or they can actually use our Thai tax filing service. So we have 3 levels of service for people where we help them file their taxes on their behalf. Fully online, fully remote. You don't need to visit our office or the revenue department. They just fill out simple questions.
Very good, really.
Yeah.
Well, it's funny, you've covered, look, my last question that I got from people was, can you give us a bit more information on what this tax filing service is? And you've actually covered that in detail. So really good,
Yeah, we have 3 levels of service for people who are simple and they're just bringing in single source income, or they have to file a tax return, but it's likely they don't have tax to pay. That's called essential filing. We have assisted filing that we mentioned earlier, was to claim back tax credits. And then we have our expert tax filing for people who've got complicated situations or where they want us to take over in terms of getting all the statements.
I think a lot of people are going to need that, really, because there's more to this than meets the eye. All right, so we're halfway through. Are you ready for some more? And I've got to say, on behalf of the expats community, thank you very much so far for what you've covered.
No problem. I think the key is people really need to understand the rules before they can make any decisions.
They do really.
And there's a lot of misunderstandings, misconceptions. So really, at Expat Tax Thailand, what we want to do is give as much information out as we can, so people can make informed decisions on what they do.
Plus, you're there at the end of the day to help them, even if they don't understand or don't know how to act with all this information.
Exactly, So that's why they can take advantage of our 15-minute online
free
calls.
Brilliant.
Yeah.
You take a deep breath. Number 5 coming now, All right, so how will they know what is CRS?
So we get a lot of questions about how will the Thai government enforce this?
Are they serious about that? That's the big question. Are they serious about it?
So Thailand signed up to something called Common Reporting Standards in 2020.
Right.
And this is a global initiative to avoid tax evasion.
Interesting,
Set up by OECD countries. And basically it's called Automatic Exchange of Information. What does this mean? It actually means that all of the Common Reporting Standard countries, there's 130 different countries in there, all the usual suspects.
How many? 130 of them.
Australia, Canada, all of EU, UK, Singapore, Hong Kong. 130 different countries have signed up. What it means is it's a free flow of information from the revenue departments.
Right.
And they exchange the information for residents in other jurisdictions. So what does it mean? Thailand signed up in 2020. And last year, September, was the first time that they were able to receive the information from the other revenue departments.
I see.
So how does it work? Thailand actually receives an XLS file every year, once a year, from all of the other revenue departments that are in Common Reporting Standards. So if you have assets in a certain jurisdiction and they're in part of Common Reporting Standards, that information's relayed once a year. So your account name, value, transactions, ins and outs, is sent to that revenue department. That revenue department do with that as they please. Go through the data, and then eventually they will send that to the Thai revenue department, and that's where they receive the information. So how will they know? The information is automatically sent to Thailand for a lot of jurisdictions.
Interesting.
And are they taking this serious? Yeah, they need to increase their revenue tax base.
Of course they do.
And actually, it's looking like they're going to change the rules even further and change to a worldwide taxation system, which we don't really have enough information about yet. Yeah. But they are taking it serious.
I feel a headache coming.
Yeah, the big changes compared to how
so look, another question, can the Thai government actually track the ATM withdrawals and credit card usage? Can they track it?
Yes. So if the Visa or MasterCard is part of a country with common reporting standards, that information is already relayed to their revenue department, and that information sent to Thailand if you're a Thai tax resident. So the information is being relayed. But even not, if someone was under audit, they would ask you for all that information anyway.
Okay, yeah, of course.
So they could see it through various different ways. But ATMs and credit cards are assessable income remittance into Thailand. Yeah. It matters what was the source of the money.
Yeah, of course.
That's either used to pay off the credit card or was in the bank where the ATM card's being used. That's more important.
Yeah.
So it's really important that people do a bit of due diligence on their own situation.
Good question now. What happens if you don't file a tax return or pay the taxes owed in Thailand? What happens? What are the consequences of that?
Okay. So if you are a Thai tax resident or you have a Thai tax filing obligation, it doesn't mean that you have tax to pay, but you can have to file and not have tax to pay.
Okay.
But you have to file a tax return if you meet the certain criteria.
Okay.
If you don't file a tax return, then there are some harsh penalties that can be applied.
Yeah, I can
so
believe it.
If you, let's say you don't file this year and next year you decide, okay, I'm going to file the taxes, so you file late, they will charge you a penalty plus 1.5% for every month that it has been owed. But if you decide you're not going to file your taxes and not pay your taxes and the revenue department audit you and ask you for the information, which they can send via your bank, they can easily give you details where you live, then that's when the punishments can be quite harsh. So the fines are up to 200% of the tax owed, plus 1.5% for every month that's not being paid, plus up to 200,000 baht fine, plus up to 1 year in jail if it's not actually paid.
You've covered my next question. What are the penalties for tax evasion? Well, you've covered that, so they can be extensive then.
It can, but if people send a tax return, and there's no problem.
It's true, like the same as anywhere.
It is. It's the same with other jurisdictions like ATO, UK, IRS.
Of course,
it's all the same.
Yeah, you got to play the game.
Correct. Yeah.
Why not continue as before and assume that no foreign income has been transferred? We've just covered that, I think.
Yeah.
Yeah. What else have I got here? Okay. And how will the automatic information? You've covered that. Okay. So really. It's very interesting. So everybody is on the hook, is that right?
Not everyone's on the hook. So let's talk through assets which are not taxable.
Yeah, please.
This is really important. So people don't need to worry. It's not all money that's transferred into Thailand. It's only certain types.
Okay.
So let's go through the assets which are not assessable income now. So if you have cash in the bank from previous tax years.
Right.
Shall I explain what that means?
Yeah, please. Okay. The more you can explain it, the better for everybody, really.
Okay. So November 2023, there was an announcement from the Revenue Department that cash in the bank as of the 31st of December 2023 can be brought into Thailand anytime in the future. This is not assessable income.
Right. Okay.
So if you had cash balances as of the end of 2023, this money can be remitted, transferred into Thailand, or spent on an ATM card without that being classed as assessable income.
Okay.
That's really important for people. Also, if they receive an inheritance overseas. So if they receive an inheritance, that is not taxable.
Okay.
It's not assessable income. If it's local domestic inheritance, then there's inheritance tax rules here. But if it's overseas and it's brought in, that's inheritance. That's not taxable. If you've got assets like Social Security, which are exempt on the double taxation agreement, that's not assessable income as well. If you bring in investments and you sell an investment and it's not made any money, it's lost money, then you're only bringing in capital, not gains. That's not assessable income. Let's say you sell a property. And you sell it for less than you bought it for. You can bring that in. That's not assessable income. So it's only on pensions. Depending if it's not on the double taxation agreement. Of course. Investment capital gains. If that's brought in, maybe you can use tax credits depending on the double taxation agreement. Property rental income. If you've got a property overseas and you receive it income, you can bring that into Thailand. That's assessable income. You might be able to offset tax paid in another jurisdiction. Dividends. If you receive dividends overseas and you bring that in, that's assessable income. So there's quite a lot of different assets. If you've got crypto gains.
Well, I was going to ask you about that in a moment.
Yeah.
Unreal. Right. You're taking my breath away, you know. I've got here, where can people find out more information? Obviously, that's from yourself and everything.
Yeah. So we have a lot of content online. A lot of videos regarding double taxation agreements and different types of assets. So we've got videos on pensions, capital gains, crypto. We have different videos for different cases. Also, we've got a frequently asked questions page, hundreds of questions that we've answered. We've given answers on there, so people can find a lot of information themselves from our website. We also offer free 15-minute consultations.
You mentioned that.
But if that's not enough, then we do have one-on-one paid consultations if they want to go into more detail.
The next slide, I've got the point number 7, right? We've got a whole list of questions, but just really, I'm just going to ask you, can you remind us of the key dates and what people have to do to file? Just remind everybody, because it's so easy to skip over it and miss some points.
It is, yeah. And for a lot of people, this is the first time they have to worry about tax filing. So the tax year, let's go through the basics again.
Please.
Tax year runs from the 1st of January until the 31st of December. So if someone's in Thailand for 180 days in that time period and they're bringing in, remitting, transferring foreign sourced income. So they're into Thailand. And they meet the criteria to file a tax return. Then they have to file a tax return by the first week in April. The following year. So for this tax year, people would need to file by the first week in April next year. So they can do that in various different ways online. The e-filing. But they might need a bit of help filling out those forms.
Of course,
They can go to the local revenue office, fill out the forms and do that in person. Or they can use a paid service like ourselves. It's all online. They just answer a few simple questions on there and we help do that on their behalf.
No, good. Needed to cover that because since your talk every Tuesday at the Expat meeting, we get people are worrying a little bit and panicking a little bit. So I needed to cover that. So thank you for that.
But I think for the advice really is people don't need to worry. If they understand the rules,
that's it.
For the majority of people, it's more of an administration issue rather than a huge tax burden. For some, yes, it will be a big change, but a lot is literally just understanding the rules and dealing with the compliance and requirements needed.
Agree. And of course, and sometimes the expats are mature, let's put it like that. And so to try and take on board something new is not always easy, which is why your service is important to everybody in the expat community. Right.
Well, they don't need to understand the rules, to be quite frank.
That's right.
They just need to provide us what they've brought in, what they've remitted and the details. We calculate it, work it out and do everything for them.
So much easier. Okay, now you're ready for another list?
Yes.
I'll show everybody the list, okay? So these are expat questions, okay, that just in general, all right?
Okay.
Now, number 1, you've already mentioned it, but is cryptocurrency income taxable in Thailand?
Yeah, so we get a lot of questions about cryptocurrency.
Yeah, you would do.
And we've got a webinar and video on this specific subject. And yes, so cryptocurrency gains, if they're remitted into Thailand, are the same as investment gains. So it's taxed in the same way. Whatever's remitted, transferred into Thailand, you work out what has been the capital gain on that amount, and that is added to the assessable income in Thailand for that year. If it's not remitted into Thailand, it's not assessable income.
Okay, fair enough. Okay, another question I got. Okay, I think this was from an American. Should I record my overseas account balances as of 31st December 23, and can I transfer that tax free? I didn't read that very well, but you got the gist.
Yeah, the good advice for people to do is look at their bank accounts, cash balances as of the end of last year. So the 31st of December 2023. This account balance they can remit, transfer into Thailand anytime in the future without any tax implication. Now, where people get confused with this, it was an announcement in November from the Revenue Department. What people have got confused with is they're using this for investments and pensions. It's only for cash in the bank from previous years, not for pension values or investment values. That's separate. That's different.
Okay. What else have I got here? Okay. What are the tax rules on overseas credit cards? I think you've covered that.
Yeah. So the tax rules on overseas credit cards, there's no rule in Thailand, unlike in Singapore and the UK, where it's written in the personal income tax rules that if you use a foreign credit card, then that's classed as income. In Thailand, it's not. That's not a positive thing. It just means that if you're under audit, you'd have to prove, is this assessable income or not? If you are paying off the credit card with foreign source income, then that's tax evasion rather than using a foreign card. So got to be really careful with credit cards, and you've got to be really, what we've got to look at with all of this, whether it's ATM or credit cards, rather than looking at the rules, you've got to always think about, does this follow the spirit of the tax rules?
Okay.
And that's reasonable. What they need to look at. Are you trying to evade tax or avoid tax? If that's the case, it's potentially assessable income.
Yes. Interesting. Okay. And then another good question, how do I reduce my taxes in Thailand?
Yeah, good question. So if you have a family, you can use certain allowances and deductions.
Okay.
If you have a spouse or children, you get certain allowances and deductions. Okay. If you have local Thai medical insurance, so health insurance, you get a deduction for this. If you're over 65, you get a higher allowance as well. You get an extra allowance, age allowance, which is on top of 190,000. If you have Thai tax saving investments, you can deduct off your Thai tax as well. Yes. So if you donate to charities in Thailand and it's a registered charity,
good.
You can actually deduct off your tax as well. So there are various ways to sort of reduce down your tax.
Okay, so lots of ways to do that.
There is. If people use this for the filing service, we'll guarantee that they'll get all of the allowances and deductions that they're entitled to. Yeah,
that's a good guarantee. Okay, all right. What documents will be needed in order to declare money brought into Thailand? Do you need documents, bank statements, things like that?
Yeah, so moving forward, it's important people keep a good record.
Okay.
Every time they transfer assets into Thailand, it's important that they have some sort of record.
Okay.
Where was the source of the money? It's really important.
Yes.
If they can show it was cash in the bank from previous years, that doesn't need to be recorded as assessable income.
Right.
If it was from pensions, investment capital gains, or any of the other types of income sources, then that's where it would need to be added to the assessable income for that year. But it's important to keep a good record because you can be asked by the revenue up to 5 years for details up to 5 years.
Is that right? Well, that answer that I've got there, what records do you recommend we keep in case? You're saying keep records in general, is that right?
And I recommend that people download the statements rather than just relying on the bank in the future because we never know.
Okay.
It's important to keep your own records because it's up to the individual to prove that they don't have tax to pay rather than the revenue to prove that you do.
Okay, interesting. All right, another good one here. But is the tax declaration needed for visas?
Yeah, so at the moment, there's no requirement to have a tax ID number or file a tax return for visa renewals or visas. And actually, for a lot of people, if they're not bringing in foreign source income, say they're living on cash and they've not got a domestic income, they can't get a tax ID number and they can't file a tax return. So it's not a requirement. It's not needed. People don't need to panic. They only need a tax ID number and they only need to file if they have an obligation due to the rules and they meet the criteria.
You've clarified that one. Okay, what have I got here? Okay, this is from a Brit and a fellow Brit. Okay, my pensions are already taxed at 20% by the UK Inland Revenue, but now Thai tax wants to take an extra 20%. Right?
Yeah. Okay. So it's a common question we get where people say, it's already been taxed. I don't need to do anything.
Yes.
And they, for example, UK, they tend to say it's already been taxed at 20%. Well, that's not actually the case, because you get a UK allowances and deductions.
Of course.
It's likely that they've got some allowances, deductions, the tax might be less than 20% what they've actually been taxed on the whole amount.
Yes.
They can use the tax that they've paid as a credit against Thai tax.
Oh, okay,
but it doesn't mean they don't have to file.
Yeah.
And it doesn't mean that they don't have any more tax to pay.
Right.
It just means potentially they can use the tax credit to offset the Thai tax.
Okay.
It could mean they have to file and there's no tax. It could mean they have to file and there is tax to pay. It depends.
Okay. No, fair enough. Okay. And then another Brit. Okay. Forgive me talking, but the Brits, you know what they're like. I've got 2 pensions and I transfer money to a Thai bank account every 5 months. Do I need to worry about tax and the UK and the DTA and plus money? Is it already taxed? Same, all the questions revolve around the same things.
They do, yeah. So if they meet the requirements, so 180 days or more, they live in Thailand, then they're a Thai tax resident. Then we need to see how much are they bringing into Thailand, remitting to Thailand.
Yeah.
If they're bringing it from the sources from pensions, if it's over the minimum for an individual, which is 120,000 Thai baht, or 220 as a married joint filer, then yes, they have to file a tax return.
Yeah.
Then we have to look at how much tax they've paid in the UK, potentially use that as a tax credit. But yes, they have to file if they have brought in pension income.
All right, Carl, very good. Okay. And then the last one, I think you've already covered it. Do you pay tax on foreign income in Thailand?
Yes. So it depends. So it depends on the double taxation agreements.
Yeah.
Depends if there's an exemption on there. But if it's from the various different sources, so pension income, rental property income, investment capital gains, property sale, crypto sale, dividends, and they remit those into Thailand, yes, this is assessable income unless it's excluded on the double taxation agreement.
Right, mate. Listen, look, you've covered every question here. All right, sorry about the list, okay? But you know what it's like. I've been asking people, and people have been coming up and saying, look, can you ask him this? Can you ask that? So thank you very much. Okay, so last one.
Yes.
Part 8. Carl, how can people find out more or get help? How can they contact you? I know you've covered it, but please cover it again so everybody knows exactly where to get your help. Yeah. Professional advice, go.
If people, the first time point is to go onto the website, expattaxthailand.com.
Okay.
There's a lot of free resources on there.
Yeah.
We've put on a lot of webinars. There's a lot of content on there in terms of frequently asked questions.
Yes.
We offer free 15-minute consultations so that we can go through people's tax calculator, really assess, give them some simple information to help them make better informed decisions. Okay. They can also arrange one-on-one consultations, paid consultations if they'd like to go into more detail about the questions that they have specifically. And then the main area that we help people with is tax filing. So we have 3 levels of service, depending on their situation, whether they're a retiree with a simple situation, we have a service for them. Whether that's complicated and they're using tax credits, we've got a service for those as well. And if it's really complicated and they're bringing in multiple sources and they'd like us to deal with everything from scratch, we have a service for this.
You're there for them. Fantastic. Okay.
All online. They don't have to leave the home. We can do everything remote with questions that we, through the system that we have, all through our application, which is available on Android and iOS.
Excellent.
And client portal if people prefer a laptop.
All there for them. Okay.
Yeah.
Carl, I'm going to say, look, thank you very much on behalf of the expat community and on behalf of myself.
Yeah, no problem.
Okay, really, you've covered everything. Very impressed with the knowledge, but the service and support that you provide the expat community. So I'm going to say thank you to everybody. I think everybody needs to thank Carl, and I'm going to shake your hand. Right?
Thanks, Ron. Good to chat with you.
Yeah, very good. Okay, thanks. And maybe we'll do another one sometime in the future again.
Yeah, maybe if the rules change again,
please,
and there's further announcements, then we can do a follow-up video.
Excellent. Okay, done.
Thank you very much.
Thank you.